Hello everyone, my name is Dan Shire. Many of you know me as DJ Dan from Soulful House Nation. And today, what we want to do in our effort to be a real help to our community, first of all, I want to say thank you to Sultan from SMB Entertainment Group, who has made a decision that not only are we going to be a benefit to our audience and our community and our members, not only from a music and entertainment position, but also that there are a lot of other things going on in our lives that we can also benefit from in terms of services, in terms of products, etc. So today, done a very, very special thing here. At least I feel special that our friend here, Mr. Antrone Dailey, would come and visit us and talk a little bit about mortgages. So we're going to talk about it from a couple of standpoints. One standpoint is from, well, I don't own a home, and what do I need to do to get in position? And we'll even have some conversation regarding credit. The second thing we'll do is we will talk about, I own a home, and I have a mortgage, and we'll make sure you have the best mortgage in place, and or if there's some opportunities that are available to you. So we're going to take a few minutes and share some thoughts with you. And of course, if you want more information or you want to give us feedback, we'll be very, very happy with that. So let's get started. Antrone, how are you, sir?
I'm pretty good, Dan. Pretty good.
Good, good. So, Antrone, just tell us a little bit about you so we can establish who you are, what you do, and your level of expertise.
Okay. I'm Antrone Dailey. I am a loan officer with Annie Mac Home Mortgage. I've been doing mortgages for over 25 years. One of my strong suits is the renovation loan. I do quite a few of those. And I actually love those because what it helps you do is it helps you get a property, and if we buy smart, it'll let us have some built-in equity. So pretty much anything that's not out in the mortgage industry, I've probably seen. So hopefully I'll be able to answer almost any questions that somebody has.
Mm-hmm. All right, so Antrone, now that we've established a little bit of your background and your expertise, so let's say I'm a person who's out there, maybe I'm renting, and maybe I thought about buying a property, but I didn't for whatever reason. What do you see are the stumbling blocks? Not necessarily credit at this point, we're going to talk to credit in a minute. What do you see the stumbling block for most people?
The stumbling block for most people is going to be this. It's actually starting. And what we have to understand is that when we're looking at buying a house, it's pretty much the same as when you're looking at renting a house. In today's world, if you're going to rent a property, in most cases, they're going to run credit. If you're going to use a realtor to get into the rental property, you're going to have more money for security, pay the realtor, and your month's rent. So when you're looking at that situation, one of my applicants came to me and said, it's going to cost her $8,000 to move, to move into the property she was looking at. And by doing that, at the end of the day, she said, if I do this, I might as well look into buying a house if I'm going to have to put this much money up front. Mm-hmm. So when we worked it out, she was able to buy.
You know, one of the things too that I think scares a lot of people is the idea that somebody could lose the house, foreclose, whatever. And the fact of the matter is, in reality, let's say you did get behind over the life of a loan. The recovery period or the foreclosure period compared to if you don't pay your rent. And if you don't pay your rent, you'll be out a couple months. If you don't pay your mortgage and you never pay it again, you can take a couple years. So your recovery time is a lot longer if you're on hold.
Yeah, and you have to understand that the mortgage companies, in most cases, don't want your property. So they're willing to work along with you. So sometimes you might miss a few payments, and the mortgage company will come back in. There's things like modifications. Sometimes the modification might help you a lot more than anything else. So there's always options. The key to home ownership is actually being a homeowner. So we can have all kinds of reasons and worry about what happens. And, well, if I buy the house, this is going to happen. But guess what? If you buy a house, it's your house. You get to work through that system and say that it's yours. If you rent, I'm dealing with right now, I have a buyer who's out shopping for a house. You know why she's buying a house? Because her landlord sold the house. So she has no control over what happens to her because she was a renter. If she owned the house, it would be her decision whether or not she had to move. So my thing to most people is this: we should always explore the possibility of home ownership. And one of the biggest myths that we have right now is that it's better to rent. It's always better to own, in most cases.
Okay. Now, let's go to the next stumbling block for a lot of people. Maybe you've had some credit challenges. Let's talk about that. Let's talk about recovery time from that and what to do.
Okay. And I go right back to the starting point in saying this. I've had applicants who've actually started with me, and let's say their credit is 450. Now,
I'll tell you that's not good.
Okay, you're right. 450 is not not good. Normally, what you're looking for is a minimum score of 620. If you use the credit agencies that are out there like Credit Karma and things of that nature, their scores, they're going to give you scores that the mortgage companies are going to be able to work with. But in most cases, those scores are a little bit higher. So when we run a mortgage credit report for you, it normally comes in a little bit lower. But at least it gives you an idea of where your score is. What I would suggest is that if you're interested in buying, call a mortgage company up, give them the information, let them run your credit report, and then you'll know exactly where you are. So going back to the guy with the 450, well, at 450, it looks like it's a long way off. But in reality, we were able to actually, he went with a credit repair company, and they actually were able to get him ready to buy in 6 months. Everybody's not going to be able to do that, but during that 6 month period, he was able to do a few things. He was able to educate himself on what was going on in the market. He was actually able to save the money that he needed for a down payment. He was able to get everything in place so that he was ready. So he was able to get education. He was able to get all the things in place to do it. So I always suggest that we just start, and then we can work our way through. And as long as you have the right team of professionals around you, everybody's goal is to get you to becoming a homeowner.
Let me share one other thought too. Let's say right now you already have a mortgage and you're already set as an owner. Let's talk about your children. Do you want to set them on the path to homeownership sooner than later? So I'm going to suggest to you that the information that we're sharing with you now, if this does not directly apply to you, then perhaps you have a family member, perhaps you have one of your children, grandchildren, friends or family that this information needs to be gotten to, that you know is renting. Would you speak to that a little bit, Antrone?
So you're saying that the person who owns a house already?
Yeah, let's say you already own a house, but you say, listen, I'm good. So in that scenario, maybe you have family members, maybe you have children. Let's say maybe you're, whatever your age is, let's say you're more senior, and you got that 25, 30, 35-year-old.
If the earlier, I look at it this way, the earlier you start with the homeownership process, the further along you go. Because the average homeowner right now, I think they buy a house and they stay in anywhere from 5 to 7 years.
Yeah,
somewhere in that neighborhood. So if we look at it as a 25-year-old and you're buying your first house, if you bought, let's say, 2 years ago, the market has changed. The equity is there. So you could have bought a house at $100,000, let's say. You bought a condo, $100,000. Right now, that condo is now worth $130,000. So now you have $30,000 in equity. Now, if you had to start putting that money in the bank and try to save $30,000, it would be hard to get to. But you bought a property. The equity is now in that house. So now you can actually sell that condo, walk away with your $30,000, have a down payment for a bigger house, or buy something comparable to where you are now and put less money down and now put the money in the bank. So the house always works for you. It's like, I like to look at it as a forced savings plan. So if you buy, and I love to say buy smart. As long as we buy smart, hopefully we're in the right neighborhoods and the things are going to start to grow for us a little bit so that it becomes an asset to us down the road.
But again, would you encourage parents to share this information with their children? Let's say if they don't need a mortgage at this point.
If the
family
parents
members, friends,
Yes.
Okay.
Yes. If you're the studies show, let's put it that way, that if you grew up in a house where there was home ownership, in your mind, your concept is that you're supposed to buy a house. It's not like the first thing out of your mind is that you're going to look for a condo. And a lot of times you have there's this different mindset when you own your property. Even as a millennial coming out, when you buy your house, it's a whole different concept than when you rent. So the renter's attitude is one thing, but a homeowner's attitude is a lot different.
Well, you also start to build the wealth building process too, right?
Yeah, and you get the generational wealth. You know, sometimes with us, we're not in that position that we are able to pass something on to our kids. So let's say I'm a parent. I own a house. My child now wants to buy a house. I can always refinance my house. I can pull money out of that house. I can give them the down payment on the house that they want to buy. I can also take the money out of my house if I bought and now I want to refinance. And we have to understand that the house is an asset for us. It's not a liability. The house actually grows along with us. So that if we can refinance the house, we can take dollars out, we can help our siblings, we can help our kids buy their first house. In a lot of cases, we can take money out and we can actually buy another house.
Since you mentioned refinancing, let's say there's people out there right now that have properties and they've been paying on their mortgages for X amount of time. Sometimes it's good business to refinance and take the money out, or refinance, put the money back in your pocket, refinance, reduce your payments, refinance, and move on. So what are some signals or some things you should pay attention to that says, hey, you know what, this might be a good time to refinance? Let's say I'm already a homeowner, and I already have my mortgage, I've been paying it on for 10 years, 12, whatever it is.
What I normally do is this. I would say we look at our interest rates. We want to see what the interest rate is. Sometimes it makes sense to refinance from a 30-year down to a 15-year. You know, the market changes sometimes like that for us. Sometimes we're sitting with a property that, you know what, we need some upgrades. We need to do a couple of things in the neighborhood. The neighborhood is moving up. We take money out of it, and we can refinance it to improve the quality of the house. What was the other point? I'm sorry.
Yeah, well, you know, I've also seen people refinance and take money out of one property or get a credit line, and also buy investment property also. I mean, obviously you got to do it smartly, but you want to speak to that?
Right. So what we're looking at is this. If you're going to buy an investment property, in most cases, they're going to require 20 to 25% as a down payment. If you've owned your house for a while, in most cases, you're going to have that equity position there, and you'll be able to do it. I've actually had quite a few people who will take the house that they're living in because they've been there for a while. They'll refinance that and turn that into their investment property. And now they'll buy that new house in a different neighborhood or in the same neighborhood, but a bigger house or a better house or a house that fits their needs, and they'll have another asset now. So now they'll have two pieces of property that they can work with. And actually, I've seen a few people who've actually done it maybe about 5 or 6 times where, you know what, over a 10-year period, let's say, every 18 months they're looking at, you know what, it's another property here, I can move up, and they're always looking to get a little bit better with the property. The houses are going to be, the mortgage, I have a designation, CMPS, which means Certified Mortgage Planning Specialist.
Okay.
So basically, what I do with a lot of my applicants is I will sit down and we will plan what we need to do and how to make certain things work. I've had people who've come to me and said they want to buy a house and they'll put 20% down, and it might not be smart to put the 20% down. It might be smart to put the minimum down and call your financial advisor and give him the rest of that money and let him make that money work for you. Mm-hmm. And you can use the same concept with your property when you're doing a refi. People have actually refied the house to take money out so that they can start a savings plan. Mm-hmm. So if as a grandparent, you could refinance the house, mm-hmm. you could take money out, you could start that college fund for your grandchild mm-hmm. at that point in time. Mm-hmm. So there's the limit to how you can make a property work for you when you own it mm-hmm. is your imagination. Mm-hmm. Because there's always a way to make something grow and to make something come out. But I normally say you want to sit down with somebody who understands where you're trying to get to so that you can explain it to them and they can work along with you to get you there. Mm-hmm. But if you've been sitting in a house for a while, why wouldn't you go back into it and now you plan it out and say, this makes sense?
Mm-hmm. All right. Well, Antrone, we're getting right down to the wire, but I think we've covered the main points we wanted to cover. Mm-hmm. We wanted to cover the whole concept of buying a house. We wanted to cover the concept if your credit situation is not the greatest. We've also covered refinancing. You have any final thoughts that you would like to share, or anything you'd like to emphasize?
Yeah, the emphasis would be on making sure that you start. Mm-hmm. And what happens is this: if it's going to take you, like somebody like me, I do mortgages. This is all I do. Mm-hmm. In 2 years, if you call me, I'll still be doing mortgages. Mm-hmm. Dan sells houses. Mm-hmm. Guess what? In 2 years, if you call Dan, he'll sell houses. Mm-hmm. We have nothing to do except walk you through, put you in a plan, and if it takes a little bit longer, it takes a little bit longer. Sometimes you think that you're not ready when in reality, you're ready today. So I would say always just start the process, mm-hmm. understand exactly what it is you're trying to get to, and find the right professional to work with.
In worst case scenario, you find out where you are and what you have to do. Is that correct?
That's correct.
All right. Antrone, if people want to contact you or ask questions, how would they do it?
Okay. Mm-hmm. My website is myonlylender.com. Once you get there, I'll be able to get right back to you. If you wanted to call me, you can call me at 201-486-3200. That's 201-486-3200. Antrone Dailey, Annie Mac Home Mortgage.
One more time, can you repeat the website again?
myonlylender.com.
Okay. All right. Antrone, thank you very much for taking our time.
Thank you, Danny.
All right. Just also want to thank Mr. Burwell for giving us the opportunity to share with his audience. Thank you. My name is Dan Shiver. Many of you know me as DJ Dan from Soulful House Nation. Thank you, and we'll talk to you later.